everyone, regardless of PPP forgiveness or not, is able to defer payment of those FICA taxes, the employer side, from 3/27/2020 through the end of 2020, December 31st there. So it could be of substantial benefit. And I've had a lot of clients say, I don't want to do it, or why would I do it, etc. And I would tell you, do you have debt? Do you have debt that has interest? Do you owe any interest? If the answer is yes, and if that number is greater than a 0%, and you can structure this and feel safe doing this, because you are obligated to pay this in at the end of 2021 and 2022. Do it, take it, maximize your cash flow, pay down other higher interest debt with the money that you're saving from this employer side tax deferral.
Welcome back to the Healthy Business Podcast. On June 5th, the PPP Flexibility Act was signed into law. So there are many changes to the original PPP program. We have Steve Turner. He is the PPP specialist at the Bonadio Group. He's a principal at the Bonadio Group, CPAs, consultants, and more. And Steve is going to break down and discuss all of the new PPP rule changes in very simple terms to make it easy for all of us who have PPP to understand and to be prepared. So next up, Steve Turner, principal of the Bonadio Group. Okay, I'm here with Stephen Turner. He's the principal at the Bonadio Group. Stephen, thanks for coming in. And why don't you start off? Tell us a little bit about yourself and tell us a little bit more about the Bonadio Group.
Sure thing. Thanks for having me. My name's Steve Turner. I'm a principal with the Bonadio Group. I've been with the firm for about 12, 13 years now at this point, and I operate in our commercial audit division. So I work with a wide range of different sizes of businesses in areas like manufacturing, construction, distribution. Anyone with inventory is kind of my specialty. Bonadio has 9 different offices. We're spread out across upstate New York, plus New York City, plus Vermont, and most recently Dallas, Texas. We're a firm of about 850 people, and in my time with the firm, that's grown. The firm's grown substantially, so I think pretty deep bench to be able to take care of all of our clients. So
Excellent.
A lot of firepower.
Excellent. Yeah, sounds like it. And Steve is one of the PPP specialists at the Bonadio Group. And today I want to talk about the adjustments, the changes to the PPP program. And Steve, I'll just kind of walk through some of the more known changes. And if you could just tell us a little bit more about them. The first one is that it's now been extended from 8 weeks to 24 weeks.
So that's probably the biggest change here, and it's a result of I think when the law was first signed, 8 weeks seemed like it didn't seem like that optimistic of a timeline for this. So it was kind of expected early in the COVID-19 crisis that 8 weeks would be enough time for many of the small businesses that would be eligible for the PPP to spend down their loan substantially, close to 100%, aim for 100% forgiveness. And as we've all seen, as everything's progressed, it's 8 weeks became a safe target to an optimistic target, and then finally an unrealistic target. So 24 weeks gives some breathing room for all the businesses that are still governmentally restricted for reopening. I know here in Western New York, I haven't specifically been watching it, but I think we're about to enter phase 3 now. So restaurants are just getting back to operations and still restricted. Ultimately, it's not as it was. So if you think about all those businesses, like a hotel, like a restaurant, that really wouldn't have been able to spend down this money that they received, and it wouldn't have had the impact that it was intended to have.
Yeah, sure, sure. And that 24 weeks, is there a time frame where that no longer applies, or can it be 24 weeks from the moment you get the regardless?
So the way that it's written right now is the extension is that the covered period for forgiveness is going to be 24 weeks from the date of loan disbursement. So or December 31, 2020, whichever is earlier. And I think a key point here is, as it's written right now, there hasn't been an extension of the program application deadline. So June 30th, 20 days from now, effectively, that's still, as it stands right now, when the program will end. I found it interesting too, working with so many different businesses with the PPP. I think a lot of us assumed, based on the very first wave of funding, that we wouldn't be sitting here having a conversation on June 10th, talking about available funds through June 30th. But that is the case. There still is funding available, and it will go, as it stands right now, through the end of June. So 24 weeks from the date of loan disbursement, or December 31, 2020. And also, I think would be appropriate to add, as we talk about this right now, there's also the opportunity to elect to remain under the 8-week covered disbursement period, or I'm sorry, covered period rather. So if it's kind of an area of this change that I view as unfortunate. You have so many small business owners that made specific moves to optimize their use and spend down of these PPP funds, and some of those changes may have been bringing employees back earlier than they would have otherwise. Some of those changes may have included hazard pay, bonus pay, etc., that weren't in the normal course of business necessarily, but in the shadow of spending down the PPP. These business owners made those decisions to kind of more aggressively spend the money. And I think when I say it's unfortunate is, if this change, this Flexibility Act, had been passed even a couple weeks earlier, it really would have been more impactful to these business owners to be able to make some changes to the trajectory of their spend down, where they could have been a little more conservative, where it could have had a little more lasting impact on restoring their business as it was affected from COVID-19.
Yeah, no, I had the same problem with several clients of mine. It is unfortunate, the timing. One of the other changes is that the payroll expenditure requirement dropped to 60% from 75%. So what exactly does that mean?
Sure. So in the original law, it was stated that a minimum of 75% of the forgivable spend had to be spent on payroll. So you would be limited. If you had qualifying spend and less than 75% of your total qualifying spend, forgivable spend, was below that 75% threshold. The 75% would be a reducing limiter on that. So it'd drop you to, well, if you only spent 60% of your total spend on payroll, then you would have to kind of ratchet down to make only 25% of non-payroll costs eligible. So with this 60% change, it's meant to make it easier on small business owners, where you don't have to hit that 75% mark. You can drop it to 60. Now, the interesting intricacy here is, as it's written right now, 60% became a hard threshold, meaning you have to spend 60% of your covered loan amount on payroll. Now, there's been, from Friday to today, Friday when President Trump signed this act into law. So what are we talking? Maybe about 5 days here have elapsed. There's been further conversation and publishing of commentary that has indicated the intent wasn't to make this a hard threshold of 60%. And it's going to require, my understanding is it's going to require a modification to this law to make it back to that soft 60% where you don't, it's not an all or none if you don't hit it. But as it's written right now, it did drop from 75% to 60 utilization on payroll required, but it did, as it stands right now, make it a hard target or hard threshold.
Interesting. Yeah. So then it sounds to me like there's a much greater chance that most companies that get their PPP will make it almost fully forgivable, if not fully forgivable, by bringing it down to the 60%. So that's good news.
For sure. And that was the intention. It is good news.
Yeah. So now let's move on to FTE. The borrowers can use the 24-week period to restore their workforce levels and wages to the pre-pandemic levels required for full forgiveness. Now, that in FTE, so there's two things here. That first statement that I made, have there been changes where do they now have to get back to their full FTEs to get the forgiveness?
As it stands right now, our interpretation is that it's not an all or none. It is the safe harbor has changed. So previously, you had a reference period or two reference periods that a business could utilize, where the business would look back to a period in 2019 or a period of time in 2020, and then use their covered 8-week period and say, okay, what was my average during this period? Compare it back. And then if you didn't make that, you had a safe harbor, a kind of an out, where if you got back to 100% before on or before June 30th, then it was your get out of jail free card. You could say, well, I made it back and there were no stipulations as to sustaining those levels of employment or payroll, headcount or payroll levels. So you were good to go. You were eligible for full forgiveness as it related to FTEs. There's some lack of clarity on this though too. As with this entire process, you have an application that has certain wording in it. You have interim final regs or FAQs or other clarifications issued by the Treasury or the SBA that are still needed with this thing. Like, there's a lot of work left to do still with this Flexibility Act to go through the entire process of, like, clarify what you mean. What did you guys actually mean? What is this? How does this actually read? Is it how this reads to the letter of the law? Is that what this actually means? So to kind of answer your question, then I would say, no, it looks like it doesn't look like it's an all or none situation with the FTE headcount here. It looks like it's still going to have that same sliding scale available. It just gives more time and more flexibility to business owners to be able to reach those 100% employment levels.
Okay, thank you. And FTE, now, I've heard at one point people were considering FTE as 30 hours. I think it's been clarified. Is it now 40 hours?
It is 40 hours, and there's some sample calculations that have been put out from the different governing bodies, I guess, for this law that have walked you through. There's some practical expedient options to go to use like a 1.0 or a 0.5. There's some options that detail using tenths. There's some other documentation available that shows going beyond, deeper than tenths. So I think most business owners would be pretty safe using the calculation based on 40 hours and using tenths.
Got it. What if they calculated the original PPP with less than 40 hours?
So That's interesting too, and I think you're referring to the application itself for the original PPP loan, where you had
Yes.
a box with the here's my loan amount, 2 pages, but give me a few million bucks, and here's my head count. And to answer your question on changes between those two, it's not the same calculation. So in terms of the what if, that number that was on that application was really more relating to a business's eligibility for the program. And I'm talking about the 500 employee threshold on an affiliated basis. So that the I would say calculation that backs that initial number that just appears on your application. It doesn't mean whatever you answered that. I'll tell you that, one, to any of the business owners that would be referencing this, don't worry. It's not the same calculation. That 40-hour basis wasn't available, and it wasn't even the rules for that calculation at that time. That really is focused on eligibility. This is focused on an FTE headcount calculation for the purpose of forgiveness.
Excellent. Thank you for clarifying that. You had mentioned safe harbor. Can you define that a little bit more, please?
I can do my best with this, and I say I can do my best because this is an area that there remains a lack of clarity on this. So when I just used the phrase safe harbor, I was talking about the return to 100% FTE headcount by 12/31/20. The language of using safe harbor in this Flexibility Act further kind of details some more options for business owners that have been, I'll say disproportionately, or industries that have been disproportionately affected by COVID-19. I keep going back to, for one, I'll go back to my restaurant example. So in New York State here, I think New York State unemployment maxes out around $500. Then you have the enhanced unemployment benefits of on the federal side for $600. So you'd be talking about $1,100 a week in unemployment available here. And that was a pretty loud complaint from business owners that it's tough. I can't get my people back because I'm competing against unemployment. Now, some clarification came out with this too, and I'm not an expert on unemployment rules, law, et cetera, but my understanding is if you are offered your same job or better and you turn it down, you are not eligible for unemployment. So that kind of gave business owners a little bit of shove. You don't want to twist the arm of your good employees here, and it's understandable that there's concern. So the safe harbors, what they did is they said, look, if you're not going to be penalized, your forgiveness isn't going to be reduced if you can document in good faith that you had an inability to rehire these individuals who were employees on February 15, 2020, kind of pre-COVID, or the inability to hire similarly qualified employees for these unfilled positions by the end of the year, by the end of 2020 here. So that it requires documentation to be in place for this, but it does give business owners the option where it says, look, I contacted all my banquet workers, for example, and I offered to bring them back to probably not do banquets in a restaurant sense, but do other stuff. And they turned it down because of whatever the reason may be. It doesn't mean that I have to kind of go crazy you should try to rehire anyway, assuming that there was a need to begin with, but it doesn't mean you have to worry about rehiring. Now, there's an additional safe harbor detailed in here in the Flexibility Act as well that relates to compliance with, the wording is compliance with the CDC, Center for Disease Control, OSHA, or HHS, Health and Human Services. So think about hospitals, think about nursing homes that are governmentally restricted from operating at full capacity. So think about a nursing home that was forced to reduce capacity due to regulation. They would have a specifically detailed rules of how they can not be affected by this reduction in headcount. And it has to do with certain safety guidelines, meaning social distancing, if there was a requirement for that industry type to kind of scale back.
Very good. Thank you. One of the other changes is that now if they can't get all the PPP forgiven, that it's now 5 years, the loan, instead of 2, still at that 1%, which is a pretty nice longer term loan. And it said too that the bill allows businesses that took a PPP loan to also delay payment for their payroll taxes. Can you explain that a little bit more?
I can. So that's an interesting sweet spot with this modification. So previously, it was sort of, and I'll explain what I mean by sort of. It was sort of an all or none. If you received the PPP, you could defer employer side payroll taxes. And I'm talking what really represents 6.2% of gross payroll. So multiply that out for your own business. But you were able to defer from the date that the CARES Act was signed into law on March 27th until the date of PPP loan forgiveness. So let's take some numbers here. Let's say you had $1 million in payroll during the period of March 27th, 2020, through the date under the old law, the original law, that your covered period ended. So you could be talking, let's say March 27th. Let's say you didn't even apply or get your money till April 27th. There's a month. Yes, 2 months of covered period. So now we're at 3 months. Let's say that your application, and this is old hypothetical now, not the current state of affairs, but another 30 days elapsed before you had all your documentation together to apply for forgiveness. And let's say you got forgiveness right away. You were approved for forgiveness right away. So that's 4 months of payroll. So let's say that was $1 million, 6.2% on $1 million, 62 grand there. That $62,000 that was in that little stopwatch period of time there, 50% of it would be due interest-free with your payroll tax returns at the end of 2021. 50% would be due at the end of 2022. The 2021 and 2022 piece of this is the same, but now everyone, regardless of PPP forgiveness or not, is able to defer payment of those FICA taxes, the employer side, from 3/27/2020 through the end of 2020, December 31st there. So it could be of substantial benefit. And I've had a lot of clients say, I don't want to do it, or why would I do it, et cetera. And I would tell you, do you have debt? Do you have debt that has interest? Do you owe any interest? If the answer is yes, and if that number is greater than a 0%, and you can structure this and feel safe doing this, because you are obligated to pay this in at the end of 2021 and 2022. Do it, take it, maximize your cash flow, pay down other higher interest debt with the money that you're saving from this employer side tax deferral.
Yeah, that's excellent advice. Thank you for that. Now, to fill out the application for loan forgiveness, this isn't just you need to fill the application out and then be approved. Can you kind of walk us through how that's going to work?
This probably isn't going to be the answer that everyone wants for this, but in this changing environment, I can tell you two things. I can tell you that the existing application, as it stands right now, not only may change, but I think it'll likely change. And that's for a number of different reasons. One is clarification on the items that we discussed, modification for the 24-week period. There's a question as to, although businesses are able to elect to stay with their 8-week period, how do you do that? We don't know. No one knows at this point. What is the process of election to do you use the old application and just go forth? But I think overall, for any business owner out there that hasn't read that application, and I say this regardless of if you are outsourcing this function, maybe to your CPA, go ahead and read that thing. It's dry reading, as are most finance or accounting applications, but I would tell you that it's going to shed some light as to how the process works. It's going to detail to you as a business owner what you're going to need to have together to apply for this forgiveness of this. And you're going to see in there that you're going to have to detail things. It's not the way that the application worked, where it's what's your name, how much money do you want, and how many employees do you have. It doesn't work that way on the forgiveness side of things. It's not that easy. You're going to have to provide detailed payroll records by employee. You're going to have to provide detailed expense or spend down records for your non-payroll costs that you've had in there. You're going to need to detail your calculation of FTE. So the big pieces of all the things that we just talked about go into this application, but at this time, there's not clarity around how that's specifically going to happen and what the timeline specifically is going to look like. The Flexibility Act added detailed some changes with the what happens if how late can you wait to apply, and what happens if you don't apply for forgiveness. But it doesn't specifically speak to, well, how do you apply for forgiveness? Is it just guns blazing after 24 weeks? Do you just contact your bank and say, here's my stuff, here's my application and my backup, we're good to go? Don't know. Part of that's going to be on a bank-by-bank basis, lender by lender. Part of that's going to be on, as we receive clarification, there's a lot of work left to do on the part of the SBA and the Treasury to look, you've taken the first step and you've added some flexibility here for business owners. But step 2 is clarify all these rules for us that are unclear and do it all again, go through the entire process all again here.
Yeah, that's what I think a lot of business owners are concerned with. I've talked to clients who have just straight out, because of all the changes that have occurred as this is going, that they're fearful that eventually the government's going to say something like, sorry, all that forgiveness is really not going to happen, and you're going to have to pay that back. Have you heard that, or are you concerned at all about that?
Surprisingly, I haven't heard a ton of concern about that. My personal Steve Turner opinion on this is I don't see an outcome that includes that heavy-handed pendulum swing. Could there be further changes to this program? Absolutely. I laugh because last week I gave a presentation. I was giving a presentation on the PPP on a Thursday morning. And of course, 8 a.m. as I open the slide deck to give a presentation, I get to tell everyone, hey guys, thanks for wasting an hour with me. All this is wrong. All this is old.
Nice.
Because as I stated to clients the night before, as I was talking with them, I didn't expect it to pass the way it passed, so smoothly, so quietly, and so quickly. So, I owe a couple clients a drink because I was wrong. I was wrong there. So could it continue to happen? Absolutely, it could continue to happen. But I don't have specific concern that it's going to be a pull the rug out situation where, psych, we're done. We're going to take all this away. But all you can do in along this entire process of PPP, I've been using the example of it's like a chess game where I know how to play chess. I don't know how to play chess well, but so it's an applicable example for me. I don't know all the rules, but I know enough rules that I have to play with what I do know or what I do understand. Same thing with the PPP. It's like we have to position as a business owner. You have to make business decisions along the way based on the information that you have at hand. You can't make reactionary decisions based on entirely the what ifs. It's just not a way to kind of utilize this program.
Excellent. Very nice chess analogy too. Are there any other items that you want to add regarding the changes in PPP that we haven't already discussed?
I think, let me just take a look if there's anything else on here that would be useful to anyone listening. The loan maturity, I just want to make a comment on that too. So the wording as it stands is that it's shifted to a 5-year maturity, and the payment deferral period has changed a little too. But there is a possibility that for those that have already been in receipt of their PPP loan, that they could go back to the lender to get a modification to that agreement. At its core, the PPP is a loan. It's a debt instrument with a forgiveness provision in it too. So just like any other loan that a business owner may have, it has terms. And when you signed it, it had terms with the bank, with the lender at that time too. I think that, I don't know that there's anything else specific. I would just caution everyone, contact your advisor. You can't read enough. At the same time, consider the source, I would tell you too, because I think that's been a dangerous slippery slope with this process is just because your neighbor's doing it, just because you heard, just because you read, doesn't mean that's what the rules are. And the way that this is going to be monitored is going to be on the back end. And that's through, where applicable for bigger loans, an audit process. Don't know what that looks like. I don't know what audit means in specific terms as referenced by the Secretary of the Treasury, but it does mean that, look, hey, we know that this entire process was a little loose and we kind of let you run with the rules, business owner, but there's going to come a time where you have to be accountable for this. So I would just tell everyone, just because no one's watching you, don't play this thing so loose. Receive advisement up front and plan accordingly, as if someone's going to be looking at all of your forgiveness. And also keep in mind that every loan is covered under the Freedom of Information Act too. So people will know arguably what loan a business received, what forgiveness they received as well.
Excellent. Excellent, Steve. And if they want to contact you, what's the best way to get a hold of you?
Sure. If anyone wants to contact me, they can send me an email, just S as in Stephen, Turner, TURNER, @bonadio.com. And I'd be happy to help if anyone had any specific questions. So feel free to reach out.
Excellent. And we'll have that in the show notes. Stephen Turner, principal at the Bonadio Group. Thanks again for coming on.
Thanks for having me.
My pleasure. Take care.